Jan is telling you now all about if you are like a broker or bank and you think, okay, the cycle is still intact. We're still going to see some nice price action, and I want my clients to benefit from that. He's now telling you all about how to offer crypto trading to your clients. So back to you, Jan. Enjoy.
Yes, thanks a lot, Vicky, for the kind intro. Thanks a lot, Max. Really an honor to be within this great layout we have here. And I would like to share you the crypto playbook of DLT Finance, how we enable others to scale spot and derivatives trading within their offering across the EU with the evolving regulation we have. Trying for the next 15 minutes, give you a hands-on guide, how we enable these offering, in which ways, and how you could potentially offer your clients trading crypto. My name is Kühne. I am within partnership at DLT Finance. For those of you who are not familiar what we, DLT Finance, are, if you look from the outside, basically, we are BaFin-regulated security trading firm. We hold 9 licenses from the BaFin, which basically covers the whole spectrum of trading. But we also have a crypto custody license, and this basically gives you the hunch that we are focused only on digital assets. But we are also, to the same degree, a fintech, founded about 6 years ago in Berlin, building trading technology for crypto assets, and wanted to build that as an enterprise-grade offering. For that, quickly realized that having licenses which allows us to bring financial institution on the platform, that's really necessary to have that license together with that technical ability which we have built. Today, DLT Finance is a financial market infrastructure provider for digital assets, and we have a whole platform of products which cover the whole value chain within basically the digital asset ecosystem. What you see in the middle basically is what we have built in-house. Most importantly, obviously, the crypto trading part, and that includes both spot and derivatives trading. Also the custody part to securely store client assets and provide settlement. We partner on the fiat rail side with banks to enable on and off ramp. And being an obliger to the German AML, we can undergo the KYC for the clients interacting with crypto. We haven't built everything in-house, obviously. We have a best-of-breed approach and rely on partners bringing these legal pieces into the offering. On the liquidity side, we are connected to a lot of liquidity venues, exchanges, OTC desk to provide the liquidity in the product. We build on top of Fireblocks on the MPCQ security side. We partner with providers for AML monitoring to be compliant for the on and on-chain transaction. And obviously, the same goes for the KYC processes. We integrate that very programmatically through APIs. And offer that as a one-stop solution through our API endpoints, then again to our partners. And these vary. We have crypto-native firms like Kraken who run their offering in Germany through our platform. We have neo-brokers like eToro, which we launched a partnership last year, enabling spot crypto trading for their clients, which wasn't possible before. But we also partner with more traditional financial institution, SDX, Swiss Broker being one example here. They have a crypto custody offering, and we basically enable the brokerage part of that offering. Why is this important? With MiCA, we finally have a capital market union in Europe for digital assets. This means we have a single integrated market across all of Europe, which clients can address through our setup. With MiCA enabling spot and custody, and more important, obviously, coming derivatives trading For that, you fall under the MiFID license, which already has been able to be passported. We, as a security trading firm, we accompany both MiCA and MiFID, so we can enable not only spot trading, but also derivatives trading. Within that market, we have almost 300 million potential customers and a trading volume of 10 trillion annually. And that's obviously a massive market. To give you an idea, one of our partners, we enable them to add spot crypto trading monthly additional revenue in trading of around 500 million. So that is really a market opportunity. And we have a lot of conversation with crypto native, with Neo, and with traditional finance institution venturing into the market and being eager to offer crypto trading to their clients. How does that actually work? From a legal perspective, the setup we have chosen is a tri-party agreement. The end customers has a contractual relationship established through the TNCs, both with us and our partner. We are basically the contractual counterpart and the responsible entity towards the regulator. So clients contract with us, trade with us, and we are the custodian. But they also have a contractual relationship through TNCs with our partner, and the partner basically brings in the front end through which the brokerage service is provisioned. They bring in their brand, the experience, the customer support, the marketing effort. That all comes from the partner. So for the end customer, basically the product is very much on the look and feel from the partner, and we give the tech and regulatory framework on top of that to be able to do really an active marketing for that product. The product setup itself is very modular. So we have core models. Clients can obviously use all of these models, but depending on what they bring to the table, they can really pick and choose what parts within these setup they need. First and foremost, it's crypto trading, enabling spot and derivatives, enabling to access the liquidity which is needed here in a way which doesn't add additional latency into the flow with different order types like an RFQ, request for code order type. And from the liquidity side, we are very agnostic, ourselves not being a market maker, but only routing basically that liquidity as a risk as principle. Crypto custody side, as mentioned, we cover a broad range of assets here. And we enable through our partnership the fiat on and on ramping for the clients, which is obviously for institutions entering in the market. On-ramp is mostly the business case they are seeking for their clients. Combined with the KYC model, and all of that is basically then integrated into the experience of our clients through API. We make it visible that DLT Finance is the contractual partner here, but besides that, we try to stay in the look and feel of the product. The front end is rendered by our partners. We are not running the front end. It's outsourced as said to our partners. How does that look like then if you go through the flow of funds? And just to visualize that for basically the buy of crypto assets, how does the flow of fund works here? So we have the end client who access the partner experience either through a front end or through APIs. Most cases, it's the front end. He then has the possibility through the front end to submit orders. The partner will process these orders, checks the balances. Does the client has sufficient funds to do these trades? If it does, that order is sent to us as the broker. We on our end basically hedge ourselves for that flow through our liquidity network. You see this order number differs from this order because actually it will be then two orders, client trading with us and we hedging ourselves. Once that hedge trade is confirmed, we confirm the client orders, and at the end client will see that the trade has gone through. On this end here, with regard to the liquidity, we can provide the liquidity like we do, for example, for eToro as one of our partners. But in other instances, like for Kraken, they already have a central limit order books, and clients trading on Kraken want to interact with that central limit order book of Kraken. So for these partnerships, we basically mirror that liquidity and that order flow on a one-on-one basis directly into the liquidity of our partners. That is possible. It really depends on whether the clients bring in its own liquidity, or if it's basically new to the game, we provide that liquidity through the venues we are connected with, so the partner doesn't have to undergo that route. So this seems quite simple if you just look at the flow of funds, but the devil is, as always, into the details. So there are a lot of strings attached to that to make that actually happen. I just showed you the flow of funds for a buy. Obviously, it starts with the onboarding of the clients, with the on-ramp of fiat, the settlement processes, the off-ramp of fiat, and different parts within this are needed to make that happen. On the liquidity side, we as DLT Finance act as the single counterpart for our partners, so they don't have to interact with anybody else for the trading or for the custody side of things. We do all the connectivity needed into the market through the liquidity providers to ensure a deep liquidity, especially in markets during high volatility. So you don't want to be stuck basically with just venue. And we have a smart order routing system which enables a best execution for our clients according to the rules you have stipulated in MiFID. On the settlement side of things, ourselves being a qualified custodian, we can settle basically through our infrastructure, and we can do that in a very time-efficient manner. But we can also do that, which is very important for financial institution, in a post-trade settlement process. Usually, if you trade on a crypto exchange as a retail client, it has to be pre-funded. For institutions, they basically come from the different experience. They need a post-trade settlement, so we can enable basically our partners to trade for the clients on the T0 day and then settle at the following day, so the clients don't need to move funds before their trades. They basically can collect the funds after the client has executed a trade, and after the trade is settled, then through the settlement process and the credit intermediation we offer, which is necessary to have that delayed T+1 settlement. And on the regulation side of things, we basically cover everything towards the regulator through these outsourcing agreement we have with the partners. They obviously have to be in accordance with the outsourcing regulation defined by the regulator. We have all the compliance tools, especially the crypto native compliance tools like monitoring on-chain transaction if our partners want to enable the deposit and withdrawal of crypto assets, monitor all the trading flow to set certain rules and policies in place to be compliant in that manner as well. So with all of that, basically we, as said, BaFin-regulated security trading firm and fintech at heart. And with partnerships we have live, currently having several billions of assets under custody and a monthly trading volume. And I myself, I'm very positive going forward into this year. So I think 25 will even be more better than 24 has already had been for us. Okay.
Thank you, Jan. Thank you very much. We also have, for your case study, 2 questions from the audience. So the first one is from your conversation with clients, what's driving interest more? Is it fear of losing clients to crypto native competitors, or is it rather the opportunity to generate more revenue with crypto trading? So is it, what's like driving interest?
It really depends on with who you talk with. I mean, for partnerships we have with Kraken, the driver obviously is to be able to do active marketing, because it is a huge market, but it's becoming more and more competitive. And without active marketing, without being able to show the Kraken logo on the RB Leipzig kit, it's becoming more and more difficult. For others who already have a client base who is very keen, and with crypto, maybe like in the Etruro example, who already offers CFDs in crypto to the client base, to offer spot trading is an additional feature which then really can drive additional business. For financial institutions, we have seen that in 2021, the churn was quite high. Money was flowing out to Baltic banks because the Coinbase and Kraken of these worlds basically had their fiat rails there. And we see that again and hear that in the conversations we have, that they are afraid, and they already see that churn of client money going out. And it's not only the money leaving, it's also the people, the younger people, they want to have to build their client base in the future on, that these people are leaving banks, and they want to protect themselves for that. I think it's also a lead magnet to bring new clients into banking relationship. But for now, I think it's more the fear of losing existing clients, which drives the conversation with financial institutions.
And for the regulatory setup, if they partner with you, do they still have to apply for a crypto asset service provider license, or is it all like regulated by you?
No, it's basically the regulatory part comes from us. It really depends on if they want to take part of that value chain. That is possible, obviously, if they want to act as a finance commissioner, as an example, but we can take the burden away through the setup we have to run regulated business without the need for an own license.